Hello, everyone. Welcome to this special edition. Today, weekly focus that will just be talking on two instruments, the DXY, and give us a gold uh, analysis. I will do analysis on spot gold. Those are the two. You can now use your DXY to interpret orders. So far, we believe that for some time, the DXY had been bullish, but now since 2022, September 2022, we have been seeing uh, some corrections coming to the DXY. And with this wave, we believe that we may have completed the correction to the upside and would expect that we are going into another season very soon that will take the DXY to the downside. We are almost at the end of this, and we'll be seeing a decline very soon. So what can we see? Like I said, we have seen this structure playing a W here, and this triad also playing an X, and that we are seeing a Y to the upside. And we still hold the view that these may get to 110 area before we see the decline. But having said that, we don't have too much of that space to run to the upside because we are almost at that level where we're going to, at this point, we might be seeing dollar start crumbling. But at the same time, it could end here. And that is why we don't recommend buying into the dollar because dollar may start falling. Anytime soon, it may start falling. So if you are even buying the dollar now, you must know what you are doing in terms of the dynamics of the market and how you guide your stop loss, tightly in case the market is trying to do any other thing. So you don't want to give the market your money away. Now, having said that, we are getting to the end of this move to the upside. This may take another 4 weeks or thereabouts. We are in the last week of this year. This may take us till sometime between the 3rd or 4th week in January before we begin to see the fall of the dollar. It may just take that. It may just take that to burn off and to give us the ending structure appropriately. We may be seeing that. Like we have said that these may just be a wave 4. In between, we are seeing some structure, in here, and that this may just be the first wave of the ending structure. Now, going into this first wave of the ending structure, it will be interesting to see how this is going to correct to break the weekly support here. Of course, we may get to this support, but what is most important is that we don't break this area. Ultimately, we don't want to break 105,800. We still need to see more structure here to know if you want to begin to fall to the downside or we are still in that correction. So technically, we are still in that correction. And if you look at, are we seeing deviation on the weekly now? I believe that that is stylishly coming into play, the deviation that we expect on the RSI. We can see we peaked at this, which, looks like the wave 3 here. We picked at that. Then so far the price had made more, ascent, upwards with the RSI on the plane. So we should be seeing deviations. The RSI, if indeed we had finished, should not come and take this high again. So we should be seeing some decline in RSI. So I still expect more correction here on the weekly. We still expect more correction on the weekly to the downside, then before we break up again. So we are waiting and we are waiting. So for now, what I can say here on the weekly is that we don't want to break this support, the cluster, where the bearish candle closed here and the bullish candle opened here to the upside. We don't want to see price breaking that level at 105,800. A break means that we are bearish. But for now, we still see these as possible, the wave one of the ending structure. We may be in the middle of the wave two of that ending structure. If it's an ending structure, we expect a three wave, probably a 3-3-3-3 wave format before we begin to decline. Of course, you can count 5, but we'll see what it gives us. But price may not do more than probably to break around this area of support for us to finish this, bearing the kind of corrections we are seeing here. So if I go to the daily, the support at 106,700 is critical. So if we look at that support on the daily, that support on the daily seems to be here. This is the support, 106,700. This is support. Price may not take this. It's a weekly support. Likewise, it's the daily support here too. Price may not take this area. We are seeing that the correction, we had this a wave 4, which is an A, B, C, a truncated C here. And this is the third wave, the three-wave format that we were expecting of the ending structure, and A, B, C. It is a 1, 2, 3, or A, B, C. But of course, by the time you look at it, you can actually make 5 waves out of it, but eventually it will look like a 3 waves, which is what we expect in ending structure. For me, this looks like we still have to come to the downside one more time for us to have a proper 3 waves to the downside here as a wave 2. That's what I can see here. We still have to. So in this daily time frame that we've been seeing some consolidation here around here, probably we don't want price to take this area again now before we come to the downside. 108,200 must not be taken if we indeed have to finish up. I see this as a wave 1A and as a B to the upside. Probably that we're not seeing a 1-2 formation here for us to have the last wave C, which probably may not take this low. I think 50 looks like a very good, a decent place to, a 50 retracement of the fifth retracement looks like a very decent place for this to go back to the upside. That's what I can see on the daily. And if we go inside of a 4-hour time frame, so what looks like so this is what we are saying. This is what we said. Okay, it's like a 3 wave, wave 1, wave B, and a wave C of that ending structure. But if you want to look at it, if you want to still count it in a way, you can say, okay, from here to here is wave 1, wave 2, wave 3, wave 4, wave 5. But really, it's A, B, C. So we are expecting another A, B, C that will not take this low here. Now, this is the low we are talking about. So for us now, this looks like an A, so a B, and we'll see how we come to form a C to the downside. 50, like I said, retracement looks decent. Now I'm going to go to, but once we begin to now break, let's see the area. Once we take this area to the upside, let me bring my drawing. So once we break this area to the upside, this zone to the upside, then we are bullish again. So it may mean that this had finished the correction, but it's very shallow. It's very shallow of a B wave or a wave 2 of the ending structure. This is the 50 here. This is the daily support. So price may actually react around 50 or 618 without coming to this area at all. That is what, we should be looking at. What is A, B to C at 100 or 1618, and see the price go up again. But I feel strongly that the price will not break this area again before we see further downside. Let's look at gold on the weekly time frame. If you're going to trade gold, again, you have to be very, very careful trading gold. A couple of possibilities here. We have said so many around this structure here. We believe that this is like a fourth wave structure. Then we are seeing a 1 and a 2. We believe that this is the third wave, and we're into the fourth wave. And so we're going to go up one more time, at least to finish the fifth wave. So are we done with this fourth wave to the downside here? It looks incomplete. And so for now, we are seeing this consolidation. The consolidation could mean that we are going back up. This is where we don't want to break for now. We don't want to break this area of 27, 25. A break out of here means that we are going bullish again. So for now, with what is playing here, we are seeing a bearish tendencies from this formation here, a bearish tendencies. Like I explained to us that when we saw this doji forming here with this week, I said it's a point for us to correct. We may still be able to correct a bit up. It looks funny though, but what to guide us now is this weekly resistance. It's a place that price, if broken, we can also look at the monthly. Can we get a monthly resistance? The weekly resistance is giving us, at this point, 27, 26. We don't want to see price break that area. So on the monthly, yes, if you look at the monthly, I believe it's the same. Yeah, 26, 27, 26. So it's the monthly. So this is the candle that we don't want to take now. I want to believe the consolidation is just around this candle. It will be too premature of you to believe that because the price had closed here and it opened here and closed here is about closing here again. It will be you know, an inexperience to think that price may not still go up here. This is a consolidation area. The price is consolidating. So when you are seeing consolidation, anything is possible around this area. But where we don't want to take now, it's at this point, we don't want to break this area of 27, 26. Talk less of coming to this area of 27.50. So now let's go back to the weekly time frame to see if there's a trade you can take here. And that's what I want to guide you. We can still take some movement and take some trade. We still believe that this may be an A and a B here now. So we may have, I believe that we have finished a B because this looks like an A of a B, B of a B, and a C of a B to the upside, and that we are in the C wave. Is that we are in the C wave, or that we are into 1, 2, 3 to the upside? But I'm more favored with the DXY and everything I'm seeing. I'm still a bit favored towards the downside for dollar to still gain strength. So dollar gaining strength is going to correct the C wave. That is what we are so hoping. And at what point things are going to, the dynamics is going to change, we're going to pay attention to. For now, this is the area 27, 26 that we don't want to break. And if you ask me, price may still go a bit to the upside. Let's look at the daily time frame. On the daily time frame, This is what we are seeing. We are seeing an A structure, a B, and a C, and ABC to the downside here gives us a W, and the B wave here will form probably an X, and that's what I'm seeing here, an X, which is an A, B, and a C to finish this correction to the upside. So this is where price should not take for now, 27, 26. Yes. But again, price does not, if you know about wave count and the internal structure on the macro level, you should know that price should not even come to that area before you know that something is amiss. So now, looking at this daily structure, we want to look at these being a three-wave format. So we might be seeing another, this is a three-wave. We might be seeing a three-wave pull back to the upside. This may just be an A wave, this may be a B wave, and a third wave around this area to the upside. This may also be giving us the area to watch for, to look for. It might be a 50, a 50, a 50 retracement to the upside might just be an area to look for. This area around 26, 66, 26, 61 might be an area for us to, price may still go up to do that. Now, here, what can I see here? We are going to look at this area for those who are interested in gold and how you can plan to trade gold. For a short, I still believe that we may be seeing a short move to the upside to finish this leg. Then we will see the third wave that will break the low here and probably give us some push to the downside. But we can still take a short trade and take a, not a gamble, a calculated risk to the upside here. So what do I see? Definitely what we have been seeing here, 1, 2, 3, 4, 5, 6, 6 days. We came down 1, 2, 3, 4, 5. 5 days to the downside. Correction has taken more than 6 days. This is nothing but correction. So this is correction. So are we done with this correction? So I can say this looks like an A B to the downside. Is the C completed here? That is what we are going to look at. So let's look at the 4-hour time frame. Looking at the 4-hour time frame here, the perspective has a bit changed in the sense that this now looks to me like probably a 1, 2, a 3, a 4, and a 5 here. The impulsive nature of this means that, okay, this ended the move to the downside, though on the larger time frame is a 3-wave structure that we saw, but on the smaller time frame, just like DXY is giving us a 5-wave structure where the 5th wave is truncated. So that's why we always see an ending structure. The 5th wave is truncated beneath the 3rd wave, and that is why it will give an ending structure. A leading diagonal will give you 5, 3, 5, 3. But in the ending diagonal, you will see 3, 3, 3, 3. But the 1st and the 3rd and the 5th wave, they are actually 5-wave structure. But the only difference is that their 5th wave is truncated, and that's what I'm seeing here now. This for the 1st wave, the 2nd wave. This is the 3rd wave. You can see it ended in an impulse here, and ABC of the 4th wave, and this also in an impulse, and is truncated beneath or above it, in this case, as the 5th wave. Then we now saw this reaction to the upside. So in this reaction to the upside, for me, from here, you can see an A B, and a 5-wave of a C. So this is like a 3-wave to the upside. 1, 2, 3. On the 4-hour time frame, it's 1, 2, 3. So the C of this is 5 waves if you look at it. Then the B wave, now, looking at these 5 waves here, also, it looks like here we see 4 and a 5 here. Then in the B wave, you can see this looks like an A wave here to the downside, a B wave to the upside, and we may have finished the C wave to the upside, to the downside here. And if indeed that will finish the C wave to the downside, then it becomes an A B, and this will be the last C wave that should run 5 waves to the upside. And so riding this to the upside is where we take a small risk to the upside, and you are counting the internal wave structure as this one is going to the upside to come down again. So that is what we can see. And if we indeed work like that for us, it will be a good trade. So you buy, then you sell again. What can I see here? What can I see here? So this is the first wave A on the larger time frame that we are still coming to the upside. But in terms of the correction of the B wave, because we are focusing on the B wave now. So this forms the A of the B wave, the B of the B wave, and the C of the B wave. If I bring out my drawing to help you, let me bring out the drawing to help you. So maybe you can see that. I want you to see that. So on the bigger time frame that we still want to do the C leg, we say this is an A in the golden yellow, the B and the C to come here. But for the B wave in the middle, that's A in the blue, the B in the blue, and this may have finished the C in the blue. So if this had finished C in the blue, we must make sure that this is 5 waves to the downside here as you see. Again, this is like a 1, 2, 3 extension of B in the blue to give us, sorry, A in the blue. So the B in the blue, it's like 1, 2, 3 extension of A in the blue. So if that is the case, that would at least give us a running flat to the downside, a running flat. And we know that in a running flat, it's either we just, retrace the downside at 618, but without breaking an 100. So the trade, the wave should not break the beginning of wave A in the blue. So anything, a break to the downside in the blue here means that this is not a running flat anymore. So I may think that this is a running flat and that we are going back to the upside to finish C, the big C. So, and the immediate is to focus here now, before we now begin to look at where this wave to the upside can reach. Now, in the immediate, let's look at the 15 minutes time frame and see if there's anything to get here. 15 minutes time frame, or let's see 1 hour time frame. For those who wants to trade gold. On the 1 hour time frame, so this looks like a 3 wave. We can see now that's the A, B, and a C. This is not a 1, 2, 3, 4, 5. So this looks like an A, B, and a C wave. And the B wave here in the blue is also a 3 wave. This is an A, B. But looking at this B wave now, so we're going to see this B wave here. So the C wave to the upside. I'd rather change this to an A. Change that to an A. This becomes a B. Initially, I thought it was going to give us a motive wave. If we gave a motive wave to the upside, then we know that a motive wave will go to the upside. Then we now begin to see, oh, it's, a motive wave, then we begin to go up. But it's a 3 wave format that was given. So though it may have fallen, at about 70 downside here. And this also is a 3 wave, A, B, C. So like this one, clearly and ABC of A, ABC of B here. And this here in the B leg is also 5 waves to the upside, where we see a 1 and a 2, a 3 maybe here, the 4th wave, and the 5th wave maybe there. Or rather, you can also say that because the 3rd wave being the longest, that's what I'm seeing here. This may just be a 1 and a 2. The 3rd wave may just be like wave 3 here, and this may just be a wave 4, and this may just be a wave 5 of that B of B. Then this is C of B, and so we have this at 123, and these must give us a 5 wave to the downside. Now, looking at this, is this a 5 wave structure to the downside? We have to look at that. So if this is 1, this may be a 1, this may be a 2, and if it's a running flat, then we will expect this one to be a 3, probably a 4 here, and a 5. So the nature of the 5th wave also will help us to see, is it an impulse? Because the 3rd, the 4th, and the 5th wave must always be an impulse. The 1st, the 3rd, and the 5th wave must always be an impulse. So this is an impulse like the 1st wave. This is an impulse like the 2nd wave. The red here looks like an impulse, which is the 5th wave. And so if it's this 5th wave, and if you're going to go up again in the direction that we said we are going to go up, it has to be not a correction, but an impulse. So we are seeing this bullish move as an impulse. So let's look at the 15 minutes time frame. I want you to pay attention. You can watch this over to get what I'm trying to say. Now, back to this point now, we said this looks like a 3-wave format. We can say here now it looks like a 1, 2, 3, which is an A, then a B, then a C. Then here we can see a 1, 2, 3 of this A. Here also, this is an A, B, C of this, then the C of a B. So these are 3 wave here. This also 1, 2, a 3 wave here. The last C is a 5 wave here, which is a 3. Yeah, so a 3, 3. So here also, you can see this last part also runs like a 5 wave structure to the upside, a 1, 2. Yeah, these are subdivision of wave 3, 3 here, a 4, and a 5 here. So now, here is where we're going to pay attention if it came down as 5 waves, and that will be a C, so of the blue. So this, it's impulsive, which look like a wave 1, 1, 2, 3, a wave 2. Then this impulsive nature takes this to be a wave 3. Then the correction here looks like a wave 4. And the last impulse to the downside means that the 5th wave is truncated. So now, in trying to see that did we get a reaction? If it's indeed we got a reaction. Getting this reaction here, we can see this impulse that has broken the limit of wave 4. Wave 4 is taken in here. So we can only now see this as a possible impulse developing. So price had broken this wave 4 impulse. We are going to be counting this subdivision. Once price breaks this at a correction to the upside more than 676, tells you is a confirmation that this is the big C going to the upside. So, and that's what we are thinking. So in case you want to trade this, you look for a pullback and your stop loss must be here. If indeed this is wave 5 to the downside, this must not be taken now. 296.13 should be your stop loss. And an area in between here and here should be where you should look for your pullback to buy. So that is what I'm trying to teach now. Now on the 30 minutes time frame, so of course you follow the count here. I can see if I look at 5 minutes time frame, like I said, I'm doing an in-depth on gold. So looking at 5 minutes time frame, I can see like a 1 here, like a 1, 2, 3, 4, 5, and a 2 here. So with these two, we are seeing inside of a wave 3, and this is like 1618 has been taken. This is a 2168. This is like a 323, that's a 4. So we should be seeing correction of with 4 here. So once you break this to the downside, tells you that with 4 of this initial move have been done with, then with 4, then you can anticipate with 5, then an ABC correction to take you to the point of your entry to buy. So that's what we should be looking at now. You wanted to, we're still within the wave 3. We should see a correction like this or similar pattern here as a wave 4, a one more push, then an ABC that will take us around this area. So don't follow it now, wait for correction. So, but for those who does not know how to count wave, if it's going to be more tedious for you to count the wave, look for where you had a breakout. So let's look at 30 minutes time frame. So 30 minutes time frame tells us that this is the area of 30 minutes time frame. We have this engulfing candle breaking out of air. This might be a potential area where price may come to if that would happen. So that's an area here, which is where I put this. A 26.17 might be an area. So if price will take you at 26.17, good for you. But 26.13 will be your stop loss. Anything more, I don't recommend that. If you're going to look at 1 hour break of the engulfing candle, do we have that yet? So 1 hour break, it's really up here. It's not clear cut yet. We need just to see more structure. So, you know, that's what we can do in the interim is to patch here where you are looking for structure to unfold more here. If you look at 4 hour, the 4 hour will be a rough area, just at the area where you had with 5, which still coincide with this point here. Price most likely is going to break down through that, you know, but it will be if your account can contain that, and you don't have time to follow structure, this will be a very good area to put your entry, but price potentially could still walk down to this area. So, and you trying to take this a buy entry here will mean that you are risking about $6, about $6 if you are using 0.01, about $6, and that is the least you can do. Anything more, if you come here and you put your stop loss here, you don't know what you are doing, because this is just structure that can easily change. But for now, what we can see, I wouldn't take this to be an extended flat anymore with what is playing out here. I wouldn't take this to be an extended flat to the downside. If it's going to be an extended flat to the downside, probably around this area. Most of the time, a B wave of an extension would react around 127 and 138.2. That's where B wave of an extension will, and ultimately not beyond 1618. So, but this occurring at 123 fits in perfectly with a running flat, which I think we have bottom here. So that is what we should expect. And let's allow this to go up. You may just have an entry hanging around this area while you are waiting for more structure to build and for you to get that immediate ABC correction to give us, if it's going to be a correction, you will see a 3-wave format to come down, and which you can probably navigate to take another buy from low here and go up. Now, ultimately, if that happens, where are we going on the 1 hour time frame? On the 1 hour time frame, then you now begin to see this as the first area of your extension will change to your A, B, and a C. So where the origin now would now be from this low here, from the low of the price here, you take it to the upper limit of B wave, then back to the lower limit of C wave in this area, then that changes your calibration and pushes your 100% around this area. And we'll take your 127 around this area, 123 around this area, and we'll push your 1618 around this area. So if that happens, it means that price potentially may still go beyond this 150, 50% retracement of the, the whole movement to the downside. It looks like a good area, but you counting your internal wave, you have to make sure that wave 3 is done. If wave 3 is not done here, then this will be the next area. All you can be doing is to be watching for wave 3 before you know, okay, wave 4 is forming. Price could get here, but I don't think price is going to pull beyond this area. Price may not. This will be an ultimate area, 2697, for price to go beyond. Price is not coming here for now. If we are going to see the third way to the downside. So this might just be a wave 1 of the ending structure and the wave 2 to the upside. I believe you understood all that I said. So let's see correction to the downside in three-wave format, a more push to, once we take this to the upside, it means that we are on course. Once we break 2639 or 40 to the upside, we are on course of that C leg to finish this. But a break below 2608 means that we're already going, that means wave 2 is completed there. It looks narrow. It looks narrow or shallow. So I still favor a bit more upside, and that may take us at least, if you're able to gain an entry around this area, you might still gain about 360 to about 540 pips to the upside. So let's see how that plays out. Bye.